Hello and welcome to India Business Hour. I'm Parikshit Luthra. Here are the headlines we are tracking this evening. Supreme Court allows states to collect royalty and tax dues on mineral rights from companies from April 2005, but directs states not to levy interest or penalty on past dues. Arrears will be paid over a 12-year period from April 2026. Analysts say that companies are staring at a 2 lakh crore financial hit. The Income Tax Department enhances scrutiny on real estate investments made by high net individuals in foreign countries. Sources say thousands of notices have been issued after surveys show a surge in property deals, especially in Switzerland and Portugal. That's an exclusive. Cash-strapped SpiceJet reports a 150 crore profit in Q1, but largely due to other income, worth 371 crore rupees. Independent auditor's report says the company is not compliant with various laws, adds there is significant doubt about SpiceJet's ability to continue as a going concern. Ola Electric reports its first quarter results after market debut. Net loss widens to 347 crore. EBITDA loss narrows marginally. Revenues rise 32% year-on-year. Supreme Court stays the company law appellate tribunal's order, which allowed Byju's to settle the 158 crore rupee dispute with BCCI. A US lender to Byju's opposed the settlement, claiming the company is using funds stolen from them for the settlement. The government tweaks the Electricity Act. Amendment enables Power Ministry to allow the Adani Group to sell Bangladesh-bound power within India. The Adani Group says move will help cater to the soaring electricity demand across the country. Karnataka government orders State Department to close all accounts with State Bank of India and Punjab National Bank, calls for all deposits to be recovered, citing alleged misappropriation of funds. Global investor Ruchir Sharma calls India the last bull market in the world. At the CNBC-TV18 town hall, says the strength of the Indian market, which is entirely domestic driven, is baffling. Adds that wealth creation has been quite broad-based, also causes for lesser centralization, more competitive federalism. Ruchir Sharma calls US capitalism distorted at the CNBC-TV18 town hall, says it led to zombification of capital, says US markets have got used to getting help from the Fed whenever there is a fall. Also adds that the China story is done and days when they could generate even 4 to 5% growth were over. Mars, the maker of Snickers, to acquire Kellanova, the maker of Pringles, in a deal valued at $36 billion. The all-cash deal is the biggest ever in the packaged food industry. Car dealers worried after inventory rises by 12% in just 1 month ahead of the festive season. Sources say Maruti, Mahindra, Tata Motors, Kia see the biggest jump in unsold cars as passenger vehicle sales shrink by 2.5% in July. An army officer dies in an encounter with suspected militants in Jammu and Kashmir's Doda district. A civilian also injured in the ongoing encounter. 4 soldiers, including a captain, have been killed in multiple incidents in Doda district over the last 1 month. No relief for Delhi Chief Minister Arvind Kejriwal in the liquor policy case filed by the CBI. Supreme Court rejects the interim bail plea but issues notices to CBI seeking a response by the 22nd of August. Straight to the day's trading action. A range-bound session saw Dalal Street end the day flat. Nifty and sensex ended mildly in the green, but the broader market underperformed and persisted. The mid-cap index fell over 0.5%. IT stocks batted for the bulls, but the metal and pharma index were a big drag. The big story this evening: in a majority ruling, a 9-judge bench of the Supreme Court has allowed states to collect past dues on mineral rights in the form of royalty and tax retrospectively from April 2005. 8 judges were in favor of the verdict. Justice Nagaratna issued a dissenting order. The mining industry fears the ruling could cost up to 2 lakh crore rupees. The ruling does provide some respite for the companies, as the dues can be paid in a staggered manner over a period of 12 years from April 2026 onwards. Abhimanyu Sharma reports on the landmark verdict from the Apex Court and its ramifications.
The Supreme Court has affirmed the legislative competence of states to levy royalty and taxes on mining leaseholders and on mineral-bearing land within their respective jurisdictions. And now the fresh judgment which has come out from the Apex Court has also affirmed the retrospective levy of such royalty and taxes starting from the 1st of April 2005. However, the court has made it clear that there would be no penalties or interest which is to be imposed by states on mining leaseholders as well as on the mineral-bearing land in their respective jurisdictions. Also, a time of 12 years has been provided for staggered payments to be made by mining leaseholders in order to ensure that there is no immediate big financial impact on them. It remains to be seen whether this is going to act as a double whammy for mining leaseholders and for mining companies, even as a mining ministry official had indicated that this may serve as a setback for several mining companies. Now, several states stand to benefit from this ruling. Several mineral-rich states, including Chhattisgarh, Rajasthan, Orissa, Jharkhand and Karnataka.
So what does the Supreme Court order mean for the sector? Nigel D'Souza here for decoding the impact for us. Nigel, take it away.
Let's move to the stock focus then and the stock impact. The biggest loser, Tata Steel, as it has provisioned 17,300 crores as a contingent liability against the claims by state of Odisha if applied retrospectively. This is what's happened, right? Now, this 17,300 crores, it amounts to nearly 10% of the current market cap. But keep in mind, the stock has been weak post the Q1 FY25 results when they did give out this number of around 17,300 crores. Hindalco, well, they spoke to us here at CNBC-TV18 and they said if the taxes are levied retrospectively, then it's unlikely to affect them as they do not have any kind of pending claims.
The contingent liability is something that has been on our books for the last many, many years. So every year, if you look at the annual report, it has always been carried. So it's not anything fresh. I think we thought it was good practice for us to be transparent about that. There is a larger impact across the economy, and that's a larger concern. On an ongoing basis, that what in the past the state had planned to tax, I think the impact would be about 1,500 crores a year. But honestly, we are waiting for more clarity on the the ask as well.
Well, we also got a reaction coming in from Rakesh Arora, who said that the companies with exposure to Odisha, Jharkhand as well as Tamil Nadu, they'll have to bear the brunt. He also said that the total estimate for overdue cess is about 2 lakh crore rupees, of which the PSUs alone account for around 60,000 crores. He also added that there might be some kind of leeway that could possibly come about for PSUs by some states. Besides mining companies, well, he believes that cement companies as well that have exposure to Tamil Nadu in particular, they could get impacted. And those companies could include the likes of India Cements, that's now taken over by Ultratech Cement, as well as Ramco Cements.
Total estimate for this kind of cess which is overdue, some industry analysts have put it at around 2 lakh crore. And in the Supreme Court, one of the Solicitor General had said that for the PSU companies itself, the impact is 60,000 crore. So we are talking about big numbers here.
Meanwhile, a note by Phillip Capital has pointed out that this move is a big negative for the steel sector, with all captive mines being impacted. In fact, the note added that steel players would see a 2 to 5% impact on their market capitalization. Meanwhile, it believes that aluminium players would see a marginal impact of around 1 to 2% on their market cap. On to a CNBC-TV18 exclusive now. The Income Tax Department has issued multiple notices to seek information of overseas real estate investment by high net worth individuals. Timsi Jaipura joins us now. Timsi, what are your sources telling you, and what does this mean for high net worth individuals with real estate investments abroad?
Well, that's right. What sources are telling CNBC-TV18 is that the real estate investments by HNIs outside India is currently under our Income Tax Department scanner. IT department has undertaken enhanced tax scrutiny of real estate investments made by these HNIs abroad. The IT department has issued thousands of notices in this regard, seeking information of assets that are held abroad by these HNIs. Also, sources say that the IT department has conducted surveys which reveals that there is a sudden rise in real estate transactions by Indian HNIs in Switzerland and Portugal, to be precise, and the tax department is targeting undisclosed foreign assets and incomes that are held abroad. IT department has sought more disclosures on foreign real estate assets that are being held by these HNIs, and through this survey, which is currently being done under Section 133A, IT department has uncovered some interesting trends and some interesting notings, which includes that there is a sudden rise of number of HNIs holding immovable assets abroad, availability of properties at prices significantly lower than similar properties in India. Thus, that is why these HNIs are buying abroad. There is an influx of multinational companies into India, which has led to old business houses selling their stakes, leading to wealth generations. HNI find it investment friendly, rather foreign investment opportunities more attractive than those in India, and thus IT department has asked field formation to widen the scrutiny, seek more disclosures of assets without any time limitation. Let's see what finally culminates out of this entire drive of surveys on HNIs.
Thanks, Timsy, for joining us. Moving on, after listing on Dalal Street last week, Ola Electric has released its first quarter earnings. Net loss has widened to 347 crore rupees compared to 267 crore rupees. Loss in the same period last year. Revenue grew by over 32%, crossing 1,600 crore rupees. EBITDA loss narrowed marginally from 218 crores last year to 205 crore rupees in quarter one. IPO-bound hospitality unicorn Oyo reported its maiden profitable year, logging in gains of 229 crores in FY24. The company said that this net profit comes at the back of 8 consecutive quarters of positive adjusted EBITDA. The company also said that they have begun expanding their global footprint by acquiring K&J Consulting, which operates premium rental home company Check My Guest Group in Paris. It's yet another setback for Byju's. The Supreme Court has stayed the NCLAT's order, which allowed the startup to settle the 158 crore rupee dispute with BCCI. Remember, a US lender to Byju's opposed the settlement, claiming the company is using funds stolen from them to pay its dues. The Apex Court will now hear the case on the 23rd of August. And staying with startups, quick commerce platform Zepto has reached a deal to raise $340 million in a new funding round. According to a money control report, General Catalyst will invest $250 million, while Mars Growth will put in around $50 million. The remaining will come from existing backers. The deal is likely to value the company at $5 billion. Talking about the aviation sector now, SpiceJet has released its first quarter earnings, showing a standalone profit of 150 crores. But a detailed look at the balance sheet shows that the profit is mainly due to some payment settlement that the airline managed, without which it would have posted a loss of over 200 crores. Madhiya Mujawar joins us with the analysis. Madhiya, what do you make of the numbers?
Well, the other income mentioned in the balance sheet is actually the key highlight of SpiceJet's first quarter earnings, which helped the airline in turning its losses into profit. The other income mentioned in the balance sheet stands at 371 crores. Without this, the airline would have actually made a loss of 222 crores. I'll quickly explain how. The airline reported an income of 1695 crores in the first quarter and expenses of 1917 crores. That makes it a loss of 222 crores. But when you add to that the other income of 371 crores, you get the number 150 crores, which is the profit SpiceJet has mentioned in its numbers. The other highlight is the independent auditor's report that says SpiceJet is in non-compliance with various laws and regulations. It states the airline's accumulated losses stand at 7,662 crores, which have resulted in complete erosion of its net worth. The auditor also says that SpiceJet's current liabilities have exceeded its current assets by over 6,300 crores. And most importantly, the auditor points out that there's indication of existence of material uncertainty that may cast significant doubt about the company's ability to continue as a going concern.
All right. Thank you very much, Madhiya, for joining us. Moving on and getting you news from Karnataka. The state government has ordered the state departments to close all their accounts with State Bank of India and Punjab National Bank. It has called for all deposits to be recovered with immediate effect, citing alleged misappropriation of funds and illegal transactions. The state government has also sought a report from its departments on the closure of accounts by September 20th. The government has tweaked provisions in the Electricity Act. The amendment enables Power Ministry to allow Adani Group to sell Bangladesh bound power within India. Adani has said that the move will help cater to the soaring electricity demand across the country. Rachna Dhanrajani is here with more.
A memorandum issued by the Power Minister notifying an amendment in the Electricity Act of 2018 is likely to benefit Adani Power directly. This modification is about the import-export guidelines, which says that in case of an Indian generating station supplying power exclusively to a neighbouring country, may now be allowed to build a dedicated transmission line with the local grid and divert the power in cases of unrest in the neighbouring country. This transmission line is to be made after getting an approval, and the company will bear the cost. But the question is, how does this lay ground for Adani Power to benefit? Well, the Power Ministry has said that this is for those power companies who are in an exclusive export agreement with a neighbouring country. And so Adani Power's Jharkhand plant, the Godha plant, fits this criteria as it exports electricity to Bangladesh, which is a neighbouring country currently in the middle of a national crisis. This notification also states that the company can divert power to the local grid in the event of delayed payments, which is also the case with the same Jharkhand plant that is yet to receive about 4 to 5 months of payments. That comes to about $400 million. We also reached out to Adani Power, and they have to say that this move will benefit the Indian grid, as in when the demand spikes in the country, there will be more power available at the government's disposal. This indicates that there are plans to apply for the permit to build this transmission line and sell the power to the government of India.
Let's shift the focus to Motown, where the number of unsold cars with dealers have risen substantially ahead of the festive season. Sources telling CNBC-TV18 that the rise in dealers' inventory levels have forced vehicle makers to reduce dispatches by 2.5% in July. Over 7.3 lakh cars were unsold in the dealer network in August compared to 6.3 lakh unsold cars in July. Additionally, inventory with passenger car dealers has also risen by 16% month on month. Auto majors like Maruti, Mahindra and Kia have all seen the number of unsold cars rise in August. This has led to both companies and dealers offering high discounts on low-selling variants of cars. Speaking to me earlier today, Vinod Agarwal, president of Society of Indian Automobile Manufacturers, said that the inventory pile-up is a short-term phenomenon and he expects the upcoming festive season to drive up demand.
I think this is a short-term phenomena. It's very difficult to mention that why this has happened. This is a matter which dealers and the OEMs have to address individually, case-to-case basis. And there are talks of high inventory, but of course, this is, I think, will be a short-term phenomena, and the festive season should take care of this.
Global investor and author Ruchir Sharma feels that India is the last bull market of the world that is still raging. Speaking at the CNBC-TV18 town hall, Sharma lauded the strength of the Indian market. He also called for lesser centralization and more competitive federalism in India.
There really has been no bull market in the world this decade like India. This is a unique bull market unto itself, because also of the breadth of it.
Yeah.
Like in the US, you've had a bull market
largely driven by tech.
Concentrated by tech and a few companies at the top. In India's case, it's been extremely broad, like in terms of what's happened. You know, there are various sectors that have, virtually every sector has participated in this bull market. So it's a very unique bull market that we have seen in India. It's the like only bull market in the world, I would say today. Literally, the true bull market. There's so much focus on the center. It's Delhi, so much talk about just Modi and stuff like that. I'd say that in India, and as you know, we travel a lot, see India, what inspires me the maximum about India is our federalism. The fact that, we have so many states which do their own thing. And I'd say that the real big potential kicker for India for here is if we move even to a more competitive federalism kind of system. Like I would like to see that. Less centralization, more competitive federalism. I'd say that for me is, I think, the real hidden strength.
Time for a short break at this point, but moving on, Mars, the maker of Snickers, to acquire Kellanova, the maker of Pringles, in a deal valued at $36 billion. Details when we return. You're watching India Business Hour. An Indian Army officer was killed after a gunfight broke out between security forces and suspected militants in Jammu and Kashmir's Doda district. A civilian has also been injured in the ongoing encounter. Over the last month, 4 soldiers, including a captain, have been killed in multiple incidents in Doda district. No relief for Delhi Chief Minister Arvind Kejriwal in the liquor policy case filed by the CBI. The Supreme Court has rejected an interim bail plea filed by him. However, it issued notices to CBI seeking a response by the 22nd of August. The Central Bureau of Investigation has begun probing the rape and murder of a junior doctor in a Kolkata hospital. This after the Calcutta High Court ordered the transfer of the case to the agency. The Kolkata police has handed over the suspect who worked as a civic volunteer. Meanwhile, hospital services remain affected across the state as healthcare workers continue to protest. The Federation of Resident Doctors Association has called off its nationwide strike after a meeting with Health Minister JP Nadda. However, several other doctors' bodies said their demonstration will continue. In international news, at least 20 people have been killed across central and southern Gaza as Israel continues to deepen its presence in the region. Israel has also ordered Palestinians to immediately evacuate Khan Yunis as it prepares to act forcefully. Japanese Prime Minister Fumio Kishida will not be seeking a second term as leader of Liberal Democratic Party. During the announcement, he said that the move was a necessary step to bring change in the party. He will be stepping down in September. The decision came at a time when the government was marred by political scandals and country was hit by rising living costs. Candy giant Mars will acquire Pringles maker Kellanova for nearly $36 billion, making it the largest deal in the packaged foods industry. The all-cash deal will include Kellanova's brands, assets and operations at $83.5 per share. Shilpa Ranipeta joins us now with all the details. Shilpa, take us through the contours of the deal.
Well, you're right. It's the biggest deal in the global packaged food space, with Mars buying all of Kellanova's brands, assets and operations. Now, this includes its snacking brands like Pringles and Cheez-It, its international cereal portfolio including Special K, the North American plant-based food portfolio and the frozen breakfast portfolio as well. Now, at $83.5 per share, this deal represents a premium of approximately 44% to Kellanova's unaffected 30 trading day volume weighted average price. Now, Mars has said that it will finance the acquisition through a combination of cash on hand and new debt for which commitments have been secured. Kellanova will then become part of Mars Snacking once the transaction closes. Now, for context, Kellanova is the snacking business of Kellogg's, which split its business into 2 independent public companies last year. Now, for Mars, this deal marks a strategic move amidst its plan to double the snacking division in the next decade. This deal gives Mars Snacking entry into new snacking categories by adding $2 million brands, that's Pringles and Cheez-It, to its existing portfolio of $15 billion brands. It also adds Kellanova's RX Bar and Nutri-Grain to its portfolio, which helps Mars expand its health and wellness snacking portfolio with plans to invest in introducing more better-for-you nutrition options and a focus on the new age consumer, given a majority of Kellanova's snacking brands currently outperform category competitors, particularly among Gen Z and millennial consumers. Now, the agreement was unanimously approved by the board of directors of Kellanova and is subjected to shareholder approval and is expected to close within the first half of 2025.
With that, it's a wrap on this edition of India Business Hour. But before we go, here are some visuals of Beating Retreat Ceremony 2024 at the Atari Wagah border ahead of Independence Day. Thank you for watching. The news continues right here on CNBC-TV18.